SCHD is killing me. Is it time to pull the plug? Is it time to pull the plug? What's up, dreamers? I'm Zeke, and welcome to the Dream Green Show. Go ahead, hit that thumbs up button and that subscribe button, and hit that notification bell. That really helps out this channel more than you guys can possibly even imagine. Now, today's video, I'm going to be talking about SCHD and how has it been performing, and it has not been outperforming some of my other ETFs. Now, a lot of people commented under one of my last videos. This is not how you build wealth. This is not how you grow wealth. You're better off just buying VOO, SPY, QQQ, and then when you're ready to retire, take that money and then put it inside of SCHD and live off of those dividends. Yes, that might be true. That it might be the quickest way to grow your account is to invest inside QQQ, heavily invest inside of the technology industry, and by the time you're ready to retire, put that inside of SCHD and then live off of those dividends. But there are a lot of people out there that's ready to take those dividend payments and start to live off of those dividend payments or help pay some of the bills inside the house. Because if you're investing inside of VOO, they have pretty much no dividends. If you're investing inside of QQQ, they pretty much have no dividends. You have no way to create income if you're very, very new or not really that entailed on the stock market. But with SCHD, you know that if you invest once a quarter, but you invest inside of SCHD, you know that invest inside this dividend ETF that has a 3.75% dividend yield just from investing inside of SCHD. They're going to pay you a dividend every single quarter by doing absolutely nothing at all. So every 3 months, they're pretty much saying, hey, thank you for investing inside of ETFs. Here's a dividend payment. And then they put that right inside of your account, and you could do with it whatever you want to do with it. And a lot of people are ready to use some of those dividend payments, and that's why they invest inside of SCHD. A lot of people are almost ready to retire, and that's why they're putting some of their money inside of SCHD, because they do not have time for the market swings. So in this video, I'm going to show you guys exactly how SCHD has been performing for me, my plans for the future, and what I'm going to do with it today. But before we dive into this video, guys, if you do want to join the Patreon, this is a no-brainer deal right here. The Dream Green Team, the Dream Team. Right now, we hold Zoom calls every single Sunday, and I'm teaching the wheel strategy is way better than dividends. You could create 5% a month other than 5% a year. And then I hold Zoom calls every single Sunday, and then you'll also get the Lucid Dreamer Roll, where I have 7 pro day traders in there as well that post their option trades every single day. And then I post every single time I buy and sell a stock. So right now, this deal right here is a no-brainer. Right now, the rest of August, the Dream Team, make sure you got, it's sold out. Oh, it's sold out. I might open up, because I try to keep the Zoom call small. It's sold out right now. I'm going to open it up to 5 more spots, because I don't like the Zoom calls being so big. I don't like it being so big. I told you the deal was really good. It sold out. I'm opening it up to 5 more spots, because when I hold my Zoom calls, I don't like having a screen with 20, 30 people on it. I like it very small, intimate, so I could talk to everybody in there and get to everybody questions. And it's like being a teacher in a room of 100 kids. You can't teach 100 kids, but if you're a teacher in a room with 10 kids, you can be very direct with them. So I'm going to open it up to 10 more spots. So take advantage of that if you can. Now, if we're looking at SCHD, this is SCHD right here. It is at $27.33 at the time of the recording of this video. And over the last year, they have traded sideways. They're only up 0.5%, which is not the best for SCHD. It is not the best. And over the last 5 years, they are up 43%, which is pretty doggone good. I mean, it's not bad. It's not the best, but it's pretty good. Up 43% over the last 5 years. But this is why people invest inside of SCHD, is because of their dividends, right? Now, this is the most important part. They increase their dividend yield every single year for the last 13 years, and they've been increasing it by 10.87% every single year. I know it says 5-year growth rate, but that's the average. This is it increased it by 10.8% average over the last 5 years. And they have a dividend yield of 3.75%. Some companies pay out their dividends monthly. SCHD pay out their dividends quarterly, and then you'll receive 4 paychecks in a year, and you'll receive, or whatever you invest, 3.75%. Now, what is their holdings? Now, if you take a look at their holdings, they're pretty much very diverse. They got some in the energy sector, healthcare sector, and this is the key one right here, 10.24% in the technology sector. Now, SCHD, they like to rebalance their portfolio a couple times per year. When they rebalance their portfolio, they either start to perform really good, they get rid of the stocks that's been underperforming, or they buy more of the stocks that's been underperforming, assuming that it's going to turn around. So they do rebalance their portfolio so they're not just stuck in the mud. But if we come back over here to the summary, guys, and just take one quick look. This is the last 5 years of SCHD, up 43%. And if we take a look at VOO, you guys can see that over the last 5 years, VOO is up 90%, right? But the 43% on SCHD is not including the dividends of 3.75% every single year. I'm going to show you guys how SCHD has been performing compared to VOO. And if we take a look at QQQ, which is very, very tech heavy, they're up 109% over the last 5 years. But if we take a look at their holdings, they are very invested inside of the technology sector. Now, for the people that's young, looking to grow their account, of course, you're going to invest inside of QQQ. It's going to grow the quickest because we're in a tech boom right now. It's going to grow the fastest. But you're going to see your portfolio have big swings up and also big swings down. When technology sector fall, it falls fast, but they also recover the quickest. And that's pretty good for people that's young, looking to have 109% growth over the next 5 years and don't mind to see that portfolio go up from $5,000 to $10,000, and then the very next year it went from $10,000 all the way back down to $3,000, and then all the way back up to 12. Like, those big swings are for young individuals. Now, for the people that's trying to set themselves up for retirement, you don't want to see your portfolio have those big swings like that. So they kind of gravitate to VOO and they kind of gravitate to SCHD, because you're not going to see those big swings up and you're not going to see those big swings down. You're just going to see consistent average growth over time. And while you're doing that, you're getting paid out these dividends that can help you pay your car note, your electricity bill, put gas in your car, help you start a side hustle, anything that you're going to receive these checks every single quarter that these other ETFs are not going to give out. All right, so if we come over to the charting right here, this is the last 5 years of SCHD versus VOO. There you go. The S&P 500 up 90%, the SCHD up 43%. But now, let's make this a little smaller. But now we're going to add in the other metrics. So we're going to add in the total return. So let's go to performance. We're going to turn off price return, add in total return. So this adds in the dividends from SCHD, and then we're going to update the chart. So now looking at the chart, SCHD is up 70% without all the big swings inside of the stock market, and the S&P 500 is up 90%. So included with your dividends and considering that you reinvested those dividends, there's been most of the last 5 years, SCHD has been outperforming the S&P 500. And then while the S&P 500 take these big dips like down here, SCHD only takes small dips, and then it continues to trade sideways. And then right here recently in 2024, finally the S&P 500 and SCHD flipped. So it flipped right here. Now the S&P 500 or VOO is outperforming SCHD, and it's been outperforming SCHD for the last since 2025 all the way up to right here, to where SCHD is up 70% when you include their dividends, and the S&P 500 is up 91% when you're looking at the total returns. So if you're ready to retire and you don't want to look at your account have big swings in the market, SCHD might be the way to go. If you're younger and you want to have more growth, I mean, just looking at this, I mean, SCHD has been outperforming and you've been getting dividend payments for a while now. But yes, historically over time, the S&P 500 usually do outperform SCHD. They usually outperform SCHD. Might be the quickest way to grow your account. You get a big lump of money, and then you can switch it over to SCHD and create those dividends and income by the time you're ready to retire. And if you guys do want to look at, let's add in QQQ. Okay, so we're going to add in QQQ for the total returns, and there it goes. At one point in time for a couple of years, SCHD was also outperforming QQQ. So that's the big swings in the market. It's outperforming SCHD right here. QQQ is outperforming SCHD. It's vastly underperforming. It's outperforming again. Now it's underperforming, outperforming, underperforming, and then outperforming. So QQQ, you're going to have those massive swings, and some people are just not set for their portfolio to look like that. So what am I going right now? I'm investing $20 every single day inside of SCHD. I see SCHD at a pretty good value right now. So my plan right now is that I'm going to continue to invest $20 inside of SCHD. If I see it have another pullback, any type of other pullback, that's why I'm going to go in. I'm going to sell a couple of my shares of Waste Management. That's where I park my money. And then I'm going to buy up more shares of SCHD and get those dividend payments because I'm looking to set myself up for retirement. So to set myself up for retirement, if I'm looking at SCHD, right now I have around 400 shares of SCHD. I invest around $5,200 a year inside of SCHD with $20 a day, something around there. The annual dividend increased by 11% every single year. Let's say 10%. I have a 3.75% dividend yield. I'm going to invest for the next 30 years. And the annual share price increases by, this is the last 10 years, so around 12.4% a year. And then I'm going to hit calculate dividends. And there it goes. By the time I'm ready to retire, I will have an ending balance of $2.7 million. Bringing in around $55,000 in dividend income every single year. And that's just off a $20 investment every single year. You guys can see after year 10, I'll be bringing in $12,000 in dividends every single month. And my portfolio will be around $500,000. By year 25, $27,000 a month. And then by year 30, around $50,000 a month. And I have a $2.7 million portfolio. I think that's at the beginning of year 30, and then at the end of year 30 right here, I have 2.7 million, bringing in around $55,000 a month in dividend income. So that's my plan for SCHD. I'm still on track to have a $2.7 million portfolio and bringing in around $60,000 in dividend income every single year. If I just continue to dollar cost average, if I do see SCHD at an amazing price, it being oversold on the RSI, I'm going to go in, I'm going to buy more of SCHD at a pretty decent price because I don't want to see those big portfolio swings right now, especially that the tech industry is pretty much in a bubble. It's overbought. Everything is extremely inflated right now. So to kind of protect my portfolio, even though I am investing inside of QQQ and I do invest more inside of VOO, my SCHD is my safe bet. That's going to keep my portfolio from having those massive swings down, but it's not going to have those massive swings up either. It's just going to be consistent growth, giving me some dividend income along the way that could help me pay for my vacations at the end of the year every single year. So let me know down in the comment section, guys. Are you young and growing your account and don't mind seeing those big swings inside of your portfolio? Or are you setting yourself up for retirement and don't have time to see your portfolio go up 20%, down 40%, up 60%, down 30%? Do you not have time for that and you just want to see consistent growth inside of SCHD? Let me know which one is yours down in the comment section. And if you have made it to the end of this video, consider joining the Patreon. I'm going to open it up to around like 5 more spots. You guys could join the Patreon. And then if you guys do want to get a head start inside the market, I'm going to leave a link to Moomoo down in the description. Right now, they're giving you guys up to $1,000 in NVIDIA stock just from signing up and using that platform. That is one of the best opportunities, promotions that they had in a very long time. So I would take full advantage of that, especially if you guys don't already have a brokerage account. If you do have a brokerage account already, it doesn't hurt to get more promotional money inside of the stock market, especially when it comes to NVIDIA. So if you guys want to check that out, I'm gonna leave the link to Moomoo down in the description. Go join my second channel, the Dream Green Conversations. I talk about the wheel strategies over there. But other than that, guys, I'm Zeke, bringing you the Dream Green Show, and I'm out. Peace.
This video is for educational and entertainment purposes only. It does not constitute financial advice. All investments are by risk. Do your own research. This is not licensed financial advisor. Any third party considering false under the fair use commentary and analysis. Please consult with a licensed financial advisor or professional in your area before making investment decisions.